To our audience that's already joined, we're going to have a couple poll questions throughout this, so a little bit interactive today. We love to have you guys interacting with us while we're speaking.
Yeah, and a little context as to why we decided to do this webinar. Because when the SpaceX IPO came out, we handled more phone calls in that week or two previous to SpaceX, with everyone having tons of questions. Is it a good deal? Should I jump in? So we answered everybody who called us directly, but we thought, there is so much excitement, but also just not really a lot of understanding about IPOs in general, and then this SpaceX, because boy, there was tons of excitement around the SpaceX IPO. So we're really hoping to bring some clarity in regards to IPOs, but in particular SpaceX. And Jay's going to go into some extra topics like, let's talk about tech and how do you properly invest in tech. So I am going to go ahead and introduce you, Jay. Uh,
Perfect.
Jay is a certified financial planner. He is also a financial planner and senior advisor here at KPC Financial Solutions. He helps clients navigate not just their retirement planning, but also the investment management and long-term wealth strategies. Jay has created several of our KPC models that for you clients who are on to call today, you're in some of those. And so beyond working one-on-one with clients, Jay is actively involved again in KPC's investment research, in our portfolio construction. You'll see them, they'll start with KPC. And he focuses on identifying long-term opportunities while helping clients understand the risks that come with them. You'll notice that with KPC, we're going to figure out your risk tolerance first. And then we are going to design portfolios that stay within your risk tolerance. So, but today he's going to take us beyond just the headlines, okay, to explore SpaceX's business model, its valuation, how it compares to some other successful technology companies in history, but more importantly, how investors can think about innovation within the context of a well-designed financial plan. So before coming to KPC, Jay helped other wealth managers design portfolio and understand risk mitigation when it comes to investments. So, Jay, we're totally looking forward to your perspective.
Perfect. Perfect. Thank you, Karen. Thank you for that introduction. And speaking with Karen, one of the questions we had, right, and we've heard a little, it's like, why SpaceX? Right?
Yeah.
Out of all the companies that we could talk about, what makes SpaceX such an interesting study for investors, right? And, while today's presentation is about SpaceX, it's really about something much bigger, right? And that's how investors should think about innovation, about risk, and how and making sure that any investment fits within a financial plan that gives our clients confidence to pursue long-term growth, right? So our goal today isn't to answer whether or not you should buy SpaceX, right? It's to give you a framework for evaluating opportunities like this in the future. So investing in innovation, right, isn't about chasing headlines. It's about understanding the opportunities, recognizing the risk, and making sure any investment fits within a financial plan that gives you confidence to pursue long-term growth. Right. So we're going to dive into that today. And so here's where we're headed, as Karen kind of already mentioned, right? We'll first understand what SpaceX actually is, because many people don't realize how diversified the business has become. Then we'll discuss its valuation and compare it to some of the greatest technology companies to ever go public. Okay, we're also going to talk about how IPOs have historically traded. And finally, we're going to discuss what I believe is the most important question. Not should I buy or not buy SpaceX, again, but rather how should investors think about innovation as a part of their overall portfolio? And so before we dive into the presentation, I'd like to ask everyone in attendance a quick poll question. Okay, so give me a second here to launch that to you. Hopefully you can see that on your screen, and I'll give us some time to answer that. But how familiar are you with SpaceX as an investment opportunity? I see some answers are already coming in. So that's great. Thank you. Thank you for that participation. We'll leave it open for a few more seconds here. Perfect. Perfect. So I see most of us have answered that question. So I'm going to end that poll here. Now, let's talk about the business model of SpaceX. Okay. So when most people think of SpaceX, right, we're picturing rockets launching into space. And while launches are certainly what made the company famous, they're no longer the whole story. So today, I think it's much more helpful to think of SpaceX as an integrated technology and infrastructure company with three distinct businesses. So the first one is the launch services, right? And this is the rockets. It's the foundation of the company. SpaceX has become a global leader in reusable rocket technology and provides launch services for commercial companies, governments, and defense agencies. The barriers, obviously, to entry into this business are really high, making it difficult for competitors to completely replicate what SpaceX has built. Okay, that second business is Starlink. Okay, and Starlink is building one of the world's largest satellite networks, providing high-speed internet to consumers, businesses, airlines, maritime customers, and governments around the world. Unlike rocket launches that are transactional, Starlink generates reoccurring subscription revenue, creating a much more predictable and scalable business, right? And finally, there's the AI compute business. Okay, and so SpaceX is investing heavily in large scale computing infrastructure. And while this business is still in its early stages, okay, management believes that it could become another significant growth engine as demand for AI infrastructure continues to expand. So rather than thinking of SpaceX as just a rocket company, think of it as three complementary businesses working together, right? Launch services that provide access to space, Starlink, which is creating the reoccurring cash flow, and AI infrastructure, which is positioning the company for the next wave of technological innovation. Okay. So now that we understand the three businesses, right, let's look at where the financial results are actually coming from. And so one of the biggest surprises to me in kind of diving into this is really how important Starlink has become. Okay, Starlink accounts for over 60% of SpaceX's total revenue. But more importantly, it's the company's primary source of profitability. Okay, its operating margins are approaching 40%. Starlink really has become the financial engine that helps fund the company's other broader ambitions, right? Launch services, despite being what most people associate with SpaceX, is still operating at a loss. And that's because obviously reusable rockets require enormous investments and development. Then there's the AI compute business. Okay, and it's currently losing billions of dollars. Okay, and it's not because it's failing, right? But it's because SpaceX is aggressively investing in computing infrastructure, data centers, and AI capabilities that, again, management believes are going to drive and become a major business over the next decade. If that sounds familiar, right, it should, right? We've seen, companies in the past like Amazon, for example, sacrifice those short-term profits to invest heavily in infrastructure that ultimately created entirely new businesses and long-term shareholder value. And of course, that strategy, right? That strategy only works if those investments eventually start to produce growth, right, that investors are expecting. So that brings us to the next question, right? And if investors are looking beyond today's earnings and focusing on tomorrow's opportunities, what are they actually willing to pay for that future? And so let's take a look at SpaceX's current valuation numbers. Okay. SpaceX, and we all saw it, it was in the news, right? Pretty much every day leading up to that IPO. It went public as one of the largest IPOs in history, and it trades under the symbol SPCX. Okay, it carries a market value or a capitalization, market capitalization of more than $2 trillion, right? And so this ranks it as one of the fifth to seventh largest companies in the world. And what really caught my attention, right, wasn't just the market cap number, but it's the valuation, right? So based on next year's expected revenue, investors are paying roughly $55 for every $1 in revenue that SpaceX is expected to generate. I'll repeat that, $55 in every $1 of revenue that SpaceX is expected to generate. If we look when it IPO'd, okay, investors were paying $95 based on 2025 earnings for every $1 SpaceX generated. Okay, think about that for a moment, right? Investors aren't valuing SpaceX based on where the company is today. They're valuing it on what they believe it can become over the next 20, 30 years. So, in other words, they're betting that SpaceX won't just be a launch company, a satellite internet provider. They're betting it becomes a dominant technology platform with a multi-billion-dollar business. And could that happen? Absolutely, it could happen, right? SpaceX has some incredible leadership, right? But there's another side to that story. When expectations become this high, execution has to be exceptional. Even strong growth may not be enough if the company falls short of the market's lofty expectations. That's why valuation matters, right? Great companies don't always produce great investment returns if investors pay too much for future growth. Okay, so the obvious question here, right, is have we seen valuations like this before? And so let's compare SpaceX to some of the most successful IPOs, technology IPOs in history. And so one of the best ways to evaluate a company is also to compare it to history. And so when Microsoft went public, it was helping revolutionize personal computing. Google transformed the way that we access information. Tesla fundamentally is changing the automotive industry and accelerated the transition to electrical vehicles. All of these companies have gone on to become incredible businesses and rewarded long-term investors. But what's remarkable to me is that SpaceX entered the public markets at a substantially higher valuation than any of them. Microsoft debuted at roughly 4 times sales. So that's $4 for every $1 they generated. Google about 7 times their sales. Tesla, roughly about 14 times their sales. And while SpaceX came public, it came public at approximately 95 times current sales. And so what this is telling me is investors have extremely high expectations for what this company could become, right? They're not valuing the business that we see today. Okay, they're not valuing it as a satellite company or an AI infrastructure company, or even a launch services company, because there's other examples that trade at much lower valuations. They are betting that it becomes a dominant player, right, in all of those businesses, but even in businesses that we currently don't see, right? And so, the opportunity could certainly be enormous, but when expectations are this high, execution is critical, right? So that naturally leads to the next question. If SpaceX ultimately becomes one of the world's greatest companies, does that mean that the stock moves straight up after the IPO? And history suggests that's rarely the case. And so history has taught us that great companies and great investments aren't always the same thing. The price you pay still matters. Okay. So,
Jay, a quick question.
yep,
Uh, I think some of the excitement that came about the SpaceX, there are people who are just focused on, yeah, I want to get it in, I want to take the high that the IPO hit,
yep,
and then there is that long-term perspective as far as if you're going to buy this, you're going to sit on it for a long time potentially to really see value out of it. Can you talk a
agree.
little bit about those two perspectives?
Yeah, agree completely. And that's, one of the some of the questions we were feeling is like, should I buy this today? And one of my questions is tell me about the reason why you want to buy this. Right. And kind of that hits on your point, Karen, of really it's, how long are you expecting to hold this? Right. Because if we're looking, right, one of the biggest misconceptions here is that once a great company goes public, the stock simply moves higher, right? Because you have that FOMO in the beginning, that initial euphoria. Everybody's talking about it. You want to get in on it. There's a fear of missing out, right? But history has kind of told us a different story about how these IPOs trade. And you usually see, right, that first stage that you talked about, Karen, is what we heard firsthand, right? There's excitement. People have been waiting years for the company to become public. Media coverage is everywhere. The demand is high, right? It opened up 20 to 30% higher than its initial price. Um, and people don't want to miss out, right, on that. And during this phase, right, is typically emotion is driving the price more than fundamentals are, right? We get to that second stage, and this is really, this is where reality starts to begin to set in, right? Investors start asking tougher questions. Is the valuation justified? Can management actually deliver on those ambitious growth expectations? Earnings reports start coming out, and perhaps most importantly, and we've talked about this, Karen, is that the lockup periods expire. So this is, if you're on this call, this is when you know, it allows, when that lockup period expires, it's allowing founders, employees, and early investors to finally be able to sell some shares, right, that have been private all this time. Right? I think we saw how many millionaires that it created. Um, created a lot of millionaires. They get the ability to start realizing that wealth, right? And so when this additional supply of shares starts to come on, it creates volatility. And it's not uncommon to see outstanding companies experience meaningful pullbacks during this period, right? And that leads us to kind of that third stage of an IPO, which is fundamentals take over, right? Eventually, the excitement fades, the business itself takes over. And at that point, investors become much more focused um, on the things that truly drive long-term returns, right? Revenue growth, profitability, cash flow, competitive advantages, right? Management's ability to execute. And over the long run, right, these fundamentals, not the excitement surrounding the IPO, determine whether the investment is successful, right? So this is really important, okay? This is why patience is often one of the most valuable traits in investing. History shows us that some of the greatest companies in the world experience significant volatility after going public. The businesses ultimately succeeded, but the path wasn't always a straight line, right? Great investments aren't created by chasing excitement. They're created by combining great businesses with discipline, patience, and the right entry point. Okay.
Well, the right entry point is is
That's a
something you
good.
need to focus about. And in my opinion, the beginning of an IPO is rarely a great entry point,
Hmm.
because of the volatility and something that I call pump and dump. You often see this pump up of the price and then you see it come down.
Hmm.
SpaceX is following that right now, even though it's only a few weeks out. So it is important to think about when.
It is.
When do you get in if you want to buy it?
And also, right, market cycles in that same vein, right? Good companies get sold during periods of volatility, right? So, you really, if you're buying that in the beginning, you really got to have not only the patience, but the time horizon, right? And we're going to talk about really what's important and what helps you become a great investor, right? As we mentioned, patience, but I'm going to get to later in the presentation some of the other ways that you can invest in innovation and do so with confidence, right? Um, and so this is probably where I'll lose, about half the audience, right? Um, and here's our thoughts, right? And so personally, I think the best comparison for SpaceX isn't another aerospace company, it's Tesla. Okay, Tesla's main business is cars, but it's not valued like an automaker, right? Case in point, Toyota is the largest automaker in the world by unit sales and revenue. They sell about 10 million cars annually. They have a market cap, right, of around 250 billion, and the price you can pay for their sales is roughly 75 cents for every dollar of sales that they produce. Tesla, by comparison, sells about 2 million cars a year, has a market cap of $1.4 trillion dollars and a price to sales of around 16. So $16 for every $1 in sales that they have. And so the reason for this is because the market is not valuing what they believe Tesla, currently is in their current business. They're valuing that it can be and can grow through the autonomous driving, AI, robotics, energy storage, and other future businesses. I call this the Elon Musk effect. Okay. And I believe that SpaceX or investors are approaching SpaceX the same way. If you value SpaceX, strictly as a rocket company, a satellite internet provider, and an AI infrastructure business, it's difficult to justify today's valuation. By those traditional measures, it looks wildly overvalued. But again, that's not what investors are buying into right now. They're buying into the possibility that SpaceX becomes a foundational technology platform, and not only one that connects the globe through Starlink, right, and launches rockets into space, but they're looking at it in terms of businesses that have yet to be realized, right? And one of the things I've read is the data centers in space, right? And those things are far out currently. And those are getting factored into today's valuation. And so that's why I call it Tesla on steroids. Okay, Tesla's reached a $1.5 trillion valuation on nearly 100 billion of annual revenue. SpaceX has already surpassed a 2 trillion valuation on less than 20 billion of revenue. The market isn't valuing today's financials, it's valuing tomorrow's possibilities. So this brings us to the next question that I think everyone is asking, right? Should I own SpaceX? Okay. And I don't think the question is simply a yes or no. The real question is does an investment like this deserve a place in your portfolio? And if so, how much and where should it fit? And this is where financial planning comes in. Okay, we don't build portfolios here at KPC Financial Solutions around one prediction. We build portfolios around probabilities, diversification, and the amount of risk that your financial plan can support. Okay, and that's exactly how we think about investing in innovation. Okay, it should be through disciplined position sizing, thematic allocations, and a financial plan that gives you confidence to invest in the future. So we do believe that innovation belongs in a portfolio here, right? But it should be intentional, disciplined, and supported by a financial plan. Everything we discussed today really leads to this slide. This presentation wasn't about convincing you whether or not to buy SpaceX. It's about demonstrating how we think about investing in innovation. We believe the future will likely be shaped by transformational technologies, right? Artificial intelligence, space infrastructure, robotics and automation, and other long-term secular trends. And we want our clients to participate in these opportunities. But we also recognize that innovation comes with uncertainty. And that's why we don't believe in making these concentrated bets on one company, no matter how compelling the story is. So, what are some things we can take away? Number one, right, when you're investing in the future of innovation, one of the first things that's so important is disciplined position sizing. So, no single investment should have the ability to make or break your financial future. I was always taught, and we carry this thought into our portfolios, is that you should target for single stock positions anywhere between a 2 to 6% allocation. Okay. Um, Position sizing is extremely important, right? We also think that another way to get some exposure to that is through an innovation sleeve within a portfolio. And we have several portfolios that already have this within them. But we believe that innovation deserves its own place within a diversified portfolio by creating a thematic allocation where we can pursue these long-term growth opportunities without allowing them to dominate the portfolio. And finally, the most important, right, is we let the financial plan drive the investment strategy, not the other way around. Okay, before allocating capital to higher growth opportunities, right, we first determine how much risk your financial plan can realistically support, right? To me, that's the real value in financial planning. Financial planning gives you the confidence to invest in exciting ideas because you know exactly where, why, and how much risk your plan can support. When you know your retirement isn't dependent on any one investment working out, you can pursue innovation with confidence instead of emotion. And that's so important. So I'd like to hear from you guys with another poll, and I'll put that out right now. Um, how confident are you that your current financial plan supports the amount of risk or the amount of investment risk that you are taking? So I'll give us some time again. Again, if you see that poll question up, how confident are you that your current financial plan supports the amount of investment risk you're taking? I'll give us a little bit of time before we move to the next slide. Perfect. Thank you guys for your participation. This is a great group that we have here. I'll give you a little bit more time. And again, that's how confident are you that your current financial plan supports the amount of investment risk that you're taking? Perfect. So I'll end that poll. Thank you guys for participating in that. Now, throughout today's presentation, right, we've talked about innovation, valuation, and how to think about opportunities like SpaceX. One question we hear all the time, right, is should I buy this stock? Right? And while it's a fair question, right, it's usually not the first question we ask. Before we can answer whether an investment belongs in your portfolio, we need to understand your overall financial plan, right? What are your retirement goals? How much income will you need? What tax opportunities and challenges exist within your financial plan? How much risk can your plan realistically support? And how does this investment fit alongside everything else that you already own? That's why our process always starts with planning and not products. And so what you see up there is our wheels of service. And as you can see, there's the retirement blueprint, or as we call it, that retirement optimization blueprint. And we build for our clients a complementary retirement plan. But we also include these other pieces that you see on there, right? Tax reduction strategies are so important. Do Roth conversions make sense for you? Right? We're going to look at the entirety of your portfolio, right? And we're going to be able to stress test that portfolio and review it. We also have clients, right, that we're able to offer that gold and silver, those hard commodities for clients. We're going to look at withdrawal strategies and create a withdrawal plan or an income plan for you in retirement. We're going to look at your estate, right? Estate planning legacy. How is that money going to be passed on, and how do you want it to be passed on? We're going to look at social security optimization. And of course, one of the biggest costs in retirement being healthcare. And so we're gonna do Medicare planning for you guys all in house, right? So we like to look at that whole picture, and it always starts with us on that retirement optimization blueprint. So, once we understand what our clients' goals are, right, we build that financial blueprint. The investment decisions become much clearer because they're guided by your plan, not headlines or market excitement. So, if today's discussion made you think about your own situation, we'd love to help you answer the question. So let me show you guys what that next step looks like. Okay, so, I do hope that today's discussion gave you a different perspective, not just on SpaceX, but on how you think about investing in innovation. And if it raised questions about your own portfolio, right? If you're wondering whether you're taking the right amount of risk, or if you'd simply like a second opinion on where you stand, we'd love to have that conversation. There's no cost, there's no obligation. Our goal is simply to help you gain clarity and confidence about your financial future. So, if you'd like to connect with us, okay, I'm going to put a couple ways to do that on there. You can simply put in the chat box chat, okay, in this webinar chat box before we wrap up. Or you can simply answer this poll question that I'm going to launch right now. What complementary resource would be the most valuable to you? So after today's webinar, right, someone from our team will reach out to you to schedule whichever option is most valuable. A 30-minute clarity and confidence meeting, a portfolio second opinion, or a complementary retirement optimization blueprint. And this is where we'll build, okay, personalized financial plan for you, designed around your goals, taxes, income needs, and investments, right? So whether you become a client or not, our hope is that you leave today's webinar with a better framework for making investment decisions and greater confidence in your financial future. If we can help you take that next step, we'd be honored to do so. So I see that, we've gotten a lot of answers in that poll already. I'll leave it up here while I put up our disclosure slide next. But again, which complementary resource would be the most valuable to you? 30-minute clarity and confidence meeting, a portfolio review, a retirement optimization blueprint. Okay, we'd love to meet with you.
So Jay, you want to open it up to a couple of, a little bit of Q&A, because I know Mark had a question for you, and it's probably one that some other people are possibly thinking about.
Definitely.
Can you
Let
read that?
me let me read, or do you want to read that to me, Karen? Can you see that on your side, or do you want me to read that?
Yeah, I can see it. So how should investors separate the highly profitable, predictable cash flow engine of Starlink connectivity from the highly speculative, which is the capital intensive AI and Mars exploration, etc., when evaluating the company's long-term profitability?
Yeah, that's a great question. So again, I'll just repeat that back. So how should we look at Starlink um, in terms of as a part of the broader ambitions of SpaceX, right? And so to me, what that is, and I hope this answers your questions, I think that Starlink is the cash cow, right? That is allowing them to fund these greater ambitions, right? Because without it, they're pretty much just running through money, right? Now, I know they've signed some big deals for the AI compute, right? But again, when you look at the cost that they have, right, of building out, I believe it's Colossus is their data center and infrastructure side of the business. It is going to be extremely costly, right? And you've seen some of these companies this year, large tech companies, um, really getting hit by how much they're spending on this AI infrastructure, right? And so I kind of look at Oracle's a great example, right? Even Microsoft, right? They're looking at Microsoft too. And so why are these companies doing this, right? They're only doing this because they feel, right? Similar to, back then when people put all these major conglomerates started to build the infrastructure for electricity. They are betting that once you live with it, you cannot live without it. Okay. Now, Starlink is a front runner, okay, in terms of the satellite connectivity, but I do believe that there is competition that is coming, right, in that same space. And there's some companies I have some ideas about as well, too. Because again, if you value strictly um, SpaceX as a launch services company, a satellite company, right, and an AI compute company, it's wildly overvalued. Okay. People are also valuing that Elon Musk effect, where there's possibly businesses they've never even mentioned right now that could come along. Right. So again, to summarize that, Starlink is the cash cow that allows them to fund these greater ambitions.
And actually, that kind of ties right into a kind of a question that Geo had. What are your thoughts on investing in companies who are suppliers of SpaceX and or who are investing in SpaceX directly? And Geo says, I would speculate there are several M&As, mergers and acquisitions that SpaceX might be considering. They might kind of gobble up those supporting businesses.
Yeah, that's an interesting point, Gio, right? Because we've actually seen, similar launch company, right? And I can't say similar because SpaceX is very different, right? But Rocket Lab recently purchased Iridium. Um, IDRM, I believe, is the stock, but don't quote me on that. So I do think that there's M&As. There are the ability to invest in some of the suppliers, right, in that space portion, right? Now, again, when we look at these types of companies and innovation, you are going to see really high multiples attached to it. There's no question that there is a lot of manufacturing development that goes in. And so, profitability for a lot of these firms and finding profitable ones um, can be a little bit difficult, but that doesn't mean that the opportunity is there. Again, Geo, kind of pulling it back, I think really the question isn't trying to just identify that one company, right? I think what it is having a sleeve in the portfolio that's dedicated to innovation that owns a piece of some of these companies. Because if we continue to see that trend, right, of space companies growing bigger and bigger, right, owning a piece of it through a diversified sleeve in a portfolio, I think is one way to go about it in a responsible and disciplined way.
Okay, you've got a question from David, too. What client age group should invest in SpaceX, especially when you're already in retirement?
Great question. That is a great question. So I don't want to say that it's age specific, right? Obviously, when we're looking at time horizon, that is such an important question, right? If you are in retirement, right? And everybody in retirement has a different scenario, and that's what we see personally, right? There are people in retirement that want to own the innovation, and I think that it can be done in a way where it doesn't screw up, right? Or even if we have a pullback in it, will not expose you, right, to major downside if we put it again into a portfolio and kind of find a disciplined approach. Again, the financial plan, right? Just to reiterate this, the financial plan should dictate the investments and how much risk, not the other way around, right? Number two, disciplined portfolio sizing, right? And also possibly a sleeve, right, in that portfolio. So I think someone who is older can own a portion of those companies invested in space, right? But it has to be done in a way according to their financial plan. If they are relying on that portfolio for retirement income and a 20 to 30% decline is going to jeopardize their ability to have that money, then we need to look at the financial plan first and say that's probably not a wise decision, right? If they are a younger person with a Roth IRA, or our time horizon is not 15 years until or it might be 15 years until we actually need that money, having some towards innovation, I think is an important thing, right? And that's why we're all investing. We're investing for the future. So I don't think there's a specific age. But I do believe there's a specific financial plan that it can fit into.
All right. Can you see Maureen's question or do you want me to read it?
Can you read it for me?
Yeah. Um, when you talk about an investment sleeve, not everybody knows what that means.
Hmm.
Uh, would that be in an ETF format?
Yeah. Great question. Thanks for bringing that up. So it typically is. And so when we're talking about an investment sleeve, let's say that we're running a portfolio, right? And we're going to have our allocations, let's call it to US large cap stocks. We're going to have our allocation, for example, to value companies. And let's say that roughly 80 to 90% of that portfolio, is invested in ETFs that give us exposure to US markets, maybe some exposure to foreign developed markets. We might have 10% of that portfolio that's invested, right? And within that 10%, maybe 2% to five different ideas that we want to capitalize on. Maybe that's aerospace and defense, right? Maybe that's AI companies, right? Involved in AI computing. Maybe part of that is also invested in gold and silver, right? So that's what we typically use. And we do, Maureen, typically like to look at the ETFs or more specifically thematic ETFs that maybe give us exposure, for example, to companies invested in the electrification of our grid, right? And so there's ETFs that we purchase for our clients that are a combination of multiple companies involved in that same theme or those same businesses.
Those are all great questions.
Really
So
great questions.
as we wrap up, do we have any more questions? And if you reached out on the poll and said chat, we will get with you definitely in the next couple of days.
Perfect. Perfect. Well, thank you guys again for attending. I hope you found some interest in that. We'll be reaching out, like Karin said, in there to either set up a meeting with you, do a blueprint for you, or have a quick clarity and confidence call and meeting with you.
Absolutely. Okay. Thank you, everyone, for joining us. I hope you found it informative. I hope you had some of your questions specifically on SpaceX answered. But more, I hope what you walked away with is how it could be part of an overall investment strategy. And that strategy is based on your actual retirement plan. The answer to buy or not buy is going to be based on each individual, and we're more than happy to help with that.
Thank you.
Hi, everybody.
We'll see y'all.